Mairead, we haven't started the meeting yet, but are you listening and watching and hearing?
Hello.
Yes. Hello. Well, what was the answer to my email question? Do you happen to know?
Oh, yes, I just emailed you. You probably haven't had a chance to see it yet. So, yes, it is in God Manchester.
Thank you, Mairead. That's all I wanted to know, but apparently we are live, so we'll have to start the meeting formally in a moment. Well, thank you. It is now 2 o'clock, so I think we'll make a start. Welcome everybody to this afternoon's meeting of the Audit and Accounts Committee. It's Thursday, the 30th of January, 2025, and we're all at New Shire Hall. The County Council allows filming and photography at its public meetings, so please feel free to take pictures and use social media during the meeting. Please ensure, though, that your phone is set to silent or vibrate whilst the meeting is taking place. This meeting is being live streamed and a recording will be available to view later on the County Council's website. There's no fire alarm scheduled for today, so if or a test, so if the alarm sounds, please leave by the side doors to my left and use the external staircase to assemble in the car park. If the meeting lasts more than 2 hours, we will adjourn for a short comfort break. Can I just welcome everybody being here again, particularly Sarah Brown and Emma Lacombe from KPMG, who are present in the room. On Zoom, I'm assuming, because I've seen her, Mairead Claydon. We also have Mohammed Hussein, who is an independent member, and Emma Duncan. Emma, are you there? I'm assuming that Emma may well be there as the director, a monitoring officer. Do we know whether she's joining us? She is. Okay. Apologies and declarations of interest. Apologies for absence.
Thank you, Chair. Apologies from Councillor Bowden.
And any direct, go on,
Just,
Alan.
as I've let the chairman know, I need to leave early because I'm chairing the Finance and Assets Committee at East Cams later on today. Yeah.
So, but we will still be quorate even when Alan goes. Any declarations of interest from anybody? The only thing I want to mention is that there's reference in the Head of Internal Audit's report to St Anne's School. It doesn't say which division that's in, but the St Anne's School that it's referring to is St Anne's School in Godmanchester, which is just around the corner from where I live in my division. Item 2 is the minutes of the meeting of the 31st of October 2024 and the minutes action log. We're being asked to approve the minutes of the last meeting as an accurate record. For those of us who were there, are you happy to do so? Yes, thank you. I see no objection, so we'll take that as carried unanimously. And the next item is on the minutes action log. If I can just highlight a few things. The report to full council from this committee I did present, and I'm very grateful to Chris Bowden and to Nick for their supporting comments. We even got a round of applause, chaps and chapesses, which was quite unique, I think. But I couldn't pick that up from the sound recording, but never mind, that we did. The terms of reference went to Constitution and Ethics earlier this week and were approved without any further changes. And I think that's probably everything that I wanted to mention. Jeff.
Thank you, Chair. Well, almost inevitably, item 192 on the log concerning the Section 106 board. Members will possibly, all members will be possibly aware that there's been a bit of success during the last month in collecting some previously thought uncollectible Section 106 monies, which is good news and a bit of a relief. But I seek clarification just on this because the action refers to the new board that's been set up, which is, of course, a very good thing in itself. But I just want to know whether this committee will receive reports on, first of all, deep dive, whether everything that should be collected has been accounted for, and then following on from that, obviously the collections and the use of those funds. I'm assuming that the board will get it. Will we get it too?
Michael, do you want to answer that question?
Yeah, thank you. Through you, Chair. We moved that we would take this through the Integrated Finance Monitoring Report to Strategy, Resources and Performance. And therefore that is half yearly. So there'll be an outturn position and then a half year probably towards the latter end of 2025. So that's the proposed reporting of that, unless there are further issues in relation to any of the matters. I think this also discharges further recommendations by internal audit. So it was our proposal that that would be the committee that would receive the reports.
Okay, you hear the answer.
I do. I mean, I'm not entirely happy because I think that it's an audit matter as well, and something which we've picked up on, and we should be told on a regular basis what the situation is, as we do with other debts, for example.
Okay, Stephen.
Chair, I appreciate Councillor Seif's position, but I would just recognise the point that this committee is not responsible for the governance of the council's finances and finance decision making. It's responsible constitutionally for the auditing of the council's accounts, and therefore the auditing responsibilities will be discharged, but strategy, resources and performance, as our parent policy and service committee above all others, is the one that takes responsibility for the governance of financial transactions. So Michael is absolutely correct that that's the place that will be reported on, and where financial matters are brought to this committee or indeed where a further internal audit to follow up on Section 106 governance is undertaken, that's where this committee would then have oversight of those issues. Thank you.
And I sit on strategy, resources and performance, so I have the ability to ask those questions as well. And if I feel that things are not satisfactory, I'll come back to you. Can we move on?
Can I make one last point?
Go
I
on.
thought one of the things that we can do as part of this committee is to call other committees to account so that we can ask them to report back to us. I thought that was part of the new constitution of this committee.
We can in due course, but I would suggest we let them get on with it first and see how things pan out. The only other thing I wanted to raise was a number of the outstanding items talk about in progress. And so, for example, on page 18, item 197, and then the next page on page, there is something about the review of the databases going on, and it's expected all risks will be managed by the autumn, but it doesn't actually say which year that is to be done. So I'm just hoping that where things are ongoing, we could include an expected date for completion.
Chair, yes, quite happy to confirm that is autumn of this year, 2025, and the matter has been raised regarding the relationship with Opus, and again, I would hope that that will be determined at some point in the first 6 months of this calendar year.
Okay, thank you very much. Any other comments from anybody? No, so sorry, go on, Stephen.
Chair, just very briefly on Opus People Solutions. Michael's obviously the action owner in relation to that matter, but just worth noting that there is a report forthcoming to the shareholder subcommittee in relation to Opus People Solutions, which in many ways should address some of these issues. So that's already planned and I think is referenced in the report you have later today on interims and agency workers. So that will hopefully be addressed, and therefore you can have some more precision in terms of closure dates subject to that shareholder subcommittee meeting. And yes, I would echo your point around the use of the phrase autumn without a particular year. We are not the civil service. We do not work to seasons. Thank you, Chair.
Excellent, thank you very much. Okay, so we have taken the minutes action log as noted with those various comments that we've made. Item 3 is petitions and public questions. None have been received this time, so we will move on. Item 4 is financial reporting and related matters from page 21 onwards, and Tom Kelly is going to introduce the report.
Thank you, Chair. So what I was intending to do was take the matters apart from 23-24 first, and then we'll come back to 23-24. And we've got the addendum from KPMG on that as well, which would be useful to consider. So just picking up 22-23 first of all, the committee will recall the council published its accounts, meeting the deadline for that one in November. That included, as we expected, a disclaimed opinion from EY. But alongside that, we were very pleased, concluding that the council did have proper arrangements in place for value for money in that year. The report then goes on, section 2.3, to consider the position in 2016, 17, 17, 18, where we have the outstanding matters on fees. Those issues are still with PSAA, and we've chased up for a kind of an update on that piece. And then section 2.4, summarising the position on the legislative piece and the backstop dates that kind of come through each year from that point onwards. So, excuse me, we met the first backstop date, and then we're coming on to 23-24, which we'll talk about in a moment, and expecting that to be similarly disclaimed. The other piece from that year then, the other general piece in the national update, section 2.45, summarising the consultation that's progressed during January on a number of those matters. This is looking at the steps taken nationally to kind of reset the audit system. So around the creation of a local audit office and the role that will play, the format and content of local authority accounts going forward, and also the composition of audit committees, making those mandatory in councils, of course, a long-standing committee at this council, and the role of independent members. And again, this committee already having an independent member sitting as part of it. So the council participated and contributed to the collective response that went into that consultation from the Society of County Treasurers. So Chair, if it's convenient, I'll just pause there in case any kind of comments on those sections and then come back through for 23-24.
Thank you, Tom. Any comments, questions for Tom? The only thing I just wanted to add, as well as the response through the Society of County Treasurers, Michael did kindly provide some similar information for me to input to the East of England Regional Audit Forum, to the government's consultation, and we wait now to hear what the response is from them. Mohammed, I don't know whether you've got any views, comments on independent members, and we have generally supported that. We definitely want to have an independent member. We haven't said one way or the other as to whether that independent member or a different independent member should also be the chair. At the moment, we've said as long as the elected councillor is an adequate chair and the committee is seen to be working together, that's adequate. But do you have any particular views on that matter?
I think initially it would make more sense maybe to bring someone in that's just independent but not chairing, just to get that exposure to the committee and also give that balance. But longer term, I have seen it done in a way where it's an independent chair completely once it's someone's coming in with the maturity and experience to do that. So I think as a first step, I would definitely recommend as best practice to have at least someone independent in the room. And then longer term, you can assess if there'll be a benefit for the chair to be independent, so they could potentially sit for longer as well, potentially, and not have as much movement in the committee as well. So you've got a constant person there.
Okay, thank you. Sarah or Emma, presumably KPMG have responded to the government consultation, have they? Either individually as a company or through your organisations?
Yes, KPMG responded to the consultation kind of jointly on behalf of myself and all of the partners. So we all contributed to that.
Just for our benefit, are you happy to share that response at some stage, just so that we can see what you said?
Oh, I'm sorry. Yes. Yeah, I'll double check what we're allowed to provide, but I think the consultations are made, then the responses are made public. So I'll share what I'm able to. I'll check. Yeah. Okay.
Any other comments? No. Okay, Tom. So do you want to go on to 23, 24, and then?
Yes.
Okay.
So if I'll say a few things briefly on this. So this really is a prelude to the additional committee meeting that's taking place in February, where the committee will consider the updated accounts again ahead of the backstop date. We now know there are some audit differences which we're intending to adjust for. So just taking the committee to page 27, there's a listing of those that are already in progress. The largest amount there relating to schools and how that was classified at year end, relatively large number, but a kind of straightforward fix going forward. And then take the committee to page 23 and section 2.1.7, which kind of flags up the areas that are still kind of for closing off in these final few weeks of the audit. Apologies. So I'd say good progress has been made. A couple of issues though to flag up in those listed bullet points. So the long-term debtor, this is in relation to this land. The the committee will know, we're reporting that the income from this land is behind target in the IFMR this year, and the shareholder committee also looking at the latest business plan this week. So that has meant we need to quite carefully consider the position there. Obviously, it is a large and material debtor, and it's an area we've taken external accounting advice on, and needing to kind of take that through some iterations alongside the new business plan. That will have implications probably more in 2024, 25, but considering that position in 23, 24 as well. And then the bullet point also around valuation of investment properties. And again, there are some quite large differences between KPMG's findings on these points so far and our professional valuers' opinion as well. There's an element of kind of ping pong there in terms of the valuer's opinion and how that plays through. So there's a consideration for the council and the Section 151 officer on what kind of final position we reach there. But again, this in the context of the accounts overall being disclaimed in terms of the opinion that comes up next year, but much more kind of audit work and progress made during the year. I think those are the main things I wanted to say from the council side, and then the KPMG's kind of summary of their audit work, I think is helpful for the committee in understanding where we're up to as well.
Thank you. I'll come to Sarah in just a moment, but these differences in valuations, did we have the same experience with EY last year? And why are you convinced by your valuations and KPMG are convinced by theirs?
So it's important to say, so there was no audit work on this last year as part of the disclaimer, and these are assets which will be valued again for the next set of accounts. So it's important in that context to think, you know, how consequential is this in some ways, because they'll go into a kind of further set of accounts, and they're items that move through the revaluation reserve or the capital adjustment account, so they don't kind of impact directly on revenue. What we have seen and the committee will recall, this valuation of property is always an area of significant interest for the auditor. It is kind of highly material. And our previous auditor perhaps focused on different areas within the accounts. So progress made on valuation of schools don't individually have as high value as the investment properties, but we have lots of schools, so that gets kind of extrapolated. So that had been an area of focus, an area where we've made progress before. But we have a small number of high value investment properties, and there are quite technical reasons connected to yield movements and lease breaks that kind of influence some of those valuation differences.
Okay, thank you. Sarah, do you want to tell us what you've found and your conclusions and why you differ a bit from what Tom has described?
Yes, of course. Would you like me to address that particular issue first and then move on to
Yes,
more
please.
of the detail in the accounts? So I think, agree with everything that's been said in terms of clearly there wasn't an audit over the prior year numbers. This is a highly judgmental area. Yeah. It is a judgmental area, and I'd say there are two issues here. One is in relation to the valuation of PPE, where we've identified some proposed adjustments. Those I would consider to be more factual, including, for example, some omissions in the data that the valuer used. So that's more of a factual adjustment that impacts PPE. In relation to investment properties, that is much more of a judgmental area. As Thomas described, it's to do with our own valuers' interpretation of how rental yields have moved, and also their position on the lease break on a particular asset that has quite a fundamental impact on the valuation. So there are those two kind of aspects that have been taken into account that by our own valuer that are more judgmental, but do also reflect perhaps a bit more attention being paid by our auditors to the lease agreements, the nature of the agreements, and the market as at end of 24, as end of 23 won't have been considered. So things have moved on quite significantly between 2022 and 2024, which will have been taken into account.
Okay, you're nodding there, Tom. Are you similarly nodding? So we have general agreement that things have changed in the last couple of years, and KPMG's work is a fair reflection of the situation now.
So we are just agreeing on where the council will land on its final values, but I think that point around there has been a movement in the market since 2022 is recognised, and Sarah is also right to draw that distinction between the judgment matters and the factual issues. So the council has detected there were some omissions in the information it sent for valuation initially, so that those corrections are straightforward and do need to be made. So there's no difference of opinion there.
I think the easiest way to say it, Chair, is that I will have decided by the time this committee next considers.
Okay, that's a fair position to leave it in. Sarah, do you want to highlight the key points from your other submission? And bearing in mind the public haven't seen that, it's not been published on the web, that we've had it as a committee in the last couple of days. But if you just highlight the key bits, and then obviously there's the main meeting in February to discuss it. Oh, it has been published sometime.
Yeah, I appreciate published quite late, but yeah, I did notice it. It is on the website. So I think, it is a summary version of our report. We do intend to bring to the end of February committee a fuller version with more detail on each of the risk areas, as well as our annual audit report, which will set out our conclusions regarding value for money. In a moment, once I've been through the financial statement impacts, Emma will just give a brief update on where we are with value for money. What we've tried to include in this summary report, because we thought it would be helpful for committee members to have an opportunity to ask some questions ahead of the end of February, given how close that is to the backstop date. Pages 4 and 5 of our report really just provide some more information regarding the implications of the backstop. I know we've talked about this at length in previous audit committees, and obviously Tom's just picked it up as well. But we did want to just reiterate, clearly there have been challenges both on our side and management side, which are inevitable, not any different to what we're seeing elsewhere in the sector. But what it means is that our opinion will reflect what we say on page 5, which is essentially that there are a number of areas where we have been unable to conclude, and we will be issuing a disclaimed opinion. Having said that, we have completed all of our planning and risk assessment work, and we have performed audit procedures over the majority of the account balances. It just may be that in some of those areas we are unable to fully conclude, and as you would expect, we're unable to conclude over opening balances and reserves, and that will take a number of years to build back assurance. Later on in the report, which I don't intend to go through in detail, but there is a few more slides that talk about the approach to reset in the sector. Page 6 of our report is probably the neatest summary in terms of where we are. So these are all of the risks that we included in our audit plan presented earlier to this audit committee. And management override of controls is a very pervasive area. It covers essentially the majority of the work that we do across the financial statements, and therefore, because of its pervasive nature, we are unable to conclude. Again, that is no different to elsewhere where we're issuing a disclaimed opinion. The valuation of land and buildings and investment property, I think we've already talked about, and our work over post-retirement benefit obligations, so the pension, asset and liabilities, our work has concluded in that area. We haven't identified any adjustments other than some suggested disclosure, and we have identified that the assumptions that have been used by the council's actuaries are in line with our range and considered to be balanced. In our report of February, we'll include more detail around that and each of the individual assumptions, but overall, we're content. This land, which Michael's already talked about, so this land debtor we had as a risk when we issued the plan. We have increased that risk to being potentially significant. The reason for that is there's been although it's post year end in terms of the period that we're looking at, we do need to take into account the fact that as at end of March 24, this land was in a net liability position and performing behind the original business plan, which would lead to an increase in credit risk and therefore a consideration needed over whether any provision needs to be made. This is a very complex area. It's moving very quickly. Business plans are being reassessed as we speak, and we know that there's been quite significant challenge from the council to this land during the year to provide that updated business plan. We know that management have sought some accounting advice in this area, not only in terms of a potential expected credit loss provision, but also implications around the minimum revenue provision. So as I say, it's complex. We don't expect to conclude on this, therefore, before the backstop date, but we are continuing conversations with management, reviewing the financial accounting advice that they've been given. So we feel that a lot of work and challenge and conversation has been had around this to get us to the right position, albeit acknowledging that that might not go through until FY25. They're the biggest areas in terms of the audit. The next slide just confirms the increase in risk in relation to this land. But I'll perhaps pause there before we move on to value for money, just in case there are any specific questions.
Thank you. Mohammed, you had your hand up previously and then you put it down. Now you put it up again.
Yes, it's probably linked to a similar point. It wasn't clear on the severity of some of these differences in terms of, I understand there's a disagreement or a difference in valuation, but how material, or is it for this land and for investment properties in terms of the business, the council's valuation and your own? Is it significantly material or just above your materiality level? Just trying to get a sense of where we're at.
Yeah, I mean, I think obviously we've not agreed the final figures, but both for PPE and for investment property, the proposed adjustments are material. They are not multiple times materiality, but they are above our materiality threshold, if that helps.
Okay, no, sure, that's helpful. The other thing I just had on this land, and I guess it's not really a problem for the accounts because I understand we'll work through this and get to a view on what the value should be in the accounts, but it's just a general question around the value for money around this land in terms of, is it really a viable business opportunity and do we have the right skills and capabilities to manage that from the council's perspective? And I guess that might not be a question directly for you, Sarah, but just to kind of raise that point.
Yeah, and I think Emma will probably pick that up in a second. It's definitely a key consideration, as you'd expect, with regard to our value for money work. And we are looking at that through essentially each value for money area. So it impacts across considerations around governance, around economy and efficiency, and also implications longer term of financial sustainability. So yes, agree. And it's something we're taking into account.
Thank you.
Do you want to just pick up that point immediately?
Yeah,
because
absolutely.
we are all enthusiastically or anxiously waiting to see the business plan, but it would be interested in your assessment of whether or not we collectively, both members and officers, have got the skills to be able to assess that business plan and determine whether or not this land is a viable proposition going forward.
Yeah, am I okay to hand to you on that, Emma?
Thank you. So if I just talk specifically just about this land for the moment. So you are quite right. So this land is a key area that we've been looking at from a value for money point of view. We haven't concluded all of those findings yet. I've not shared that with management. So I'll keep it relatively high level for the committee at this point, and we can discuss in more detail in February when we've got that full conclusion. But I think the key areas that we've sort of focused on from a this land perspective is around financial sustainability. So understanding what does that mean for the council in terms of longer term plans for any recoverability issues of any of the debt. How is this land performing against business plan? From From a governance perspective, we've looked and understood how you've responded to past governance reviews, what controls, what additional aspects you've put in place to strengthen the governance. And then from the sort of what we call the 3 E's, economy, efficiency and effectiveness, really thought about, as we just mentioned there, sort of the skill level. So actually this is a, you know, it's a commercial entity, and had a think about actually are the right skill set, is there the right oversight, or the right ability to challenge that organisation. So there's sort of the areas that we're looking at. So we are still just rounding out those thought processes, and we'll obviously discuss those with Michael in the coming weeks. But that's where we've been focusing on. So that should hopefully, when we come to February, be able to give you that view across all 3 of those areas.
Okay, thank you. Michael.
Chair, yeah, it's probably helpful if I also make some comments. Clearly, there was a review going back as far as 2021, I think it was, from Avison Young that was made public, that picked up a number of areas for improvement. The council's been on that journey of improving not only the relationship and the control of the company, but also in terms of its own skills and capacity, and recognising actually that where needed, we seek and bring in external support, and we've certainly done that over the last few years to ensure that we have that right advice and are able to consider matters. We also, as part of that strengthening, have set up the shareholders subcommittee, which met yesterday to look and consider a number of matters relating to the business plan, and we continue to move this forward. It is, though, a highly technical area in terms of the accounting treatment. So there is a difference between the technical accounting matter and then the actual business plan and the moving forward in terms of the delivery of the company. And I think it's that in terms of recognition of that over the long term delivery and how we work with the company to set out that vision through our shareholder direction that we now are working over the next month or two to finalise that business plan. But I would, reiterate, it's the use of external support where we feel that it is necessary. We have absolutely recognised and look to consider then the advisors' opinions and take that forward in terms of members as the shareholders to make that an informed position.
Okay, thank you. Well, no doubt you will be discussing all those points with Emma to make sure that she's fully aware of all the different things which we are doing in the county council. Okay, the other questions I wanted to ask on page 5, Sarah, it talks about we've been unable to complete our work on the following key areas. Now, we've talked about some of them, the opening balances because of the disclaimed opinion and the recoverability of this land debtor. But there are other things like movements in usable and unusable reserves for the year ending 31st of March 2024, management override of controls, non-capital expenditure classification, accuracy of value and valuation of PFI liabilities. Presumably by the end of February, there's no reason why you shouldn't have completed this work. Is that your intention, or will they still be outstanding?
They will still be outstanding. So opening balances and movement in usable and unusable reserves, we would never have been able to conclude on, simply because we can't get comfort over the prior year, and what feeds into the usable and unusable reserves is essentially driven by prior year numbers. So those two specifically, opening balances and reserves, we will need to build up over a period of time. So being open, we might not even be able to conclude on that next year. It will take a number of years for us to be comfortable in terms of the flow through of those reserves and how they've been split. And that, again, is no different to elsewhere, and it's fully understood by all of the various technical groups. With regard to the other areas, so as I say, management override of controls is a very pervasive area. It essentially covers things like any judgments and estimation that has been made by management. It covers journal controls, journal entries, and essentially the entire environment. So even simply because we won't have been able to conclude on this land, that is a key judgment and a key estimate, and therefore means that we can't conclude on override of controls. So that won't be concluded by the end of February. Excuse me. The other two areas, quite specifically, we started our work over non-capital expenditure. We did identify an error. It's small, it's not material, but that means we would have to extend our sample to continue. Given where we are and given we are now trying to essentially conclude the audit and agree the more significant matters around the valuation of investment property and PPE, we decided that it was more beneficial to focus ours and management's efforts on coming to conclusion rather than carrying on with quite a minor area. And then on the PFI, again, we just took a decision that we weren't going to be able to conclude given the timing of the backstop. Perhaps if we had more time, we would, but that work won't be finished by the end of February.
Okay. Are folk aware and happy with that explanation? And Michael, you're nodding. Alan?
Just a comment, really, and it's more a general comment. Totally understand the situation you've got with the 22-23 opening balance, because obviously if you haven't got a surety over that, then you can't sign off on the reserves. I'm just thinking of a more general point, because obviously this is going to be applicable to all local councils, and there are people we know who read these accounts. I'm just thinking, is there something generally that the audit teams are putting forward in terms of wording, or is it something we as a council need to, I'm sure, because again, I'm sure Michael, through the county council treasurers group, which we can put just to assure those people that, you know, they'll look at it and say, oh, well, they've go into the timelines of the reset and recovery, where it looks like, again, we're not that far away. It looks like 26, 27, hopefully you'll be able to give an unmodified report. So that's only just over 12 months away in terms of the start time, but it's just really for these 2 or 3 years whether there's something in place so the reader of the accounts, or those who are interested, and I know the majority of the general public will not look at this, but it just to show that it's not us, that, you know, it's a nationwide issue, if that makes sense.
Michael, do you want to comment on that?
Yeah, thanks, Chair. And members may recall that after the 22-23 accounts were published with the disclaimed opinion, we did issue a statement around the position which was in line with the guidance from SIPFA. As you can imagine, as we progress through the next couple of years, the types and nature of the disclaimers will slightly vary between organisations, but on the whole will be similar. So we are engaged with SIPFA and Association of Local Authority Treasurers in terms of what that communication looks like, and certainly, and touching wood, that, you know, come the 26th, we are in the position of an opinion statement, and that will have a reflection in terms of the disclaimer. We'll be making communications in terms of what it all means and what it means going forward.
And of course, by 2026, 27, we may be into local government reorganisation. Who knows? And I don't know what that will mean for our auditing by then, but we will find out soon enough, no doubt. I'm looking towards Stephen and need to go, I know nothing.
Chair, the Chief Executive's not willing to speculate, and clearly government need to tell us a bit more before he's able to give you further speculation on local government reorganisation. Thank you.
Exactly right. Okay. Mohammed, you did have your hand up and then you put it down again.
Yeah, I think it was answered. It's just a question around when we were expecting on modified opinions, and I'm assuming best case is 26, 27.
I
Yes,
think that's right.
It is. I mean, I think just to reiterate, there has been, and I'm sure Tom and the team will feel it, a lot of work has happened this year. So despite us not being able to reach conclusion in a number of areas, the work that we have done will be extremely helpful in terms of getting a head start on 24-25. And even as at now, as soon as we finish, we will begin for 24-25, and we'll be able to use a lot of what we've already done. We already start at a much earlier stage in terms of the planning and risk assessment. So, I think in terms of that building back of assurance, we feel we are in a very good place.
I can't immediately find it, but there was reference somewhere to you're still awaiting for the files from EY. Have you now got those? Is there anything that we can do to help you get them from Mark or colleagues?
So from an EY point of view, we've had an initial conversation with EY. Because last year's file was disclaimed, we haven't got a requirement to review that. We don't feel it's necessary for this year, but we will look to review their files for the last audited period. So we'll do that over the coming months.
Okay, well, if there's an issue from it, Emma, then let Michael or Tom know, and we'll help you to follow it up. Is there anything more that you want to say on the value for money slide?
Yes, if I just may cover a couple of points, if that's all right. I think just to remind the committee, so the value for money piece of work is where we look at the arrangements that have been in place throughout the year, so the period over 23-24. We've done a really good lot of work, I think it's fair to say. So we've spoken to the vast majority of the executive team and various other members across the authority, really to try and understand lots of different aspects of how that you work and how you've got consistent arrangements or not, maybe the case, across the council. And the key areas, just a reminder that we look at, so is around financial sustainability, so looking at the arrangements in place to secure financial sustainability of the council, looking around governance arrangements, so that includes considerations sort of risk management, flagging of risks, oversight, scrutiny, and then sort of the economy, efficiency and effectiveness. So that's where we say, actually, are there appropriate arrangements in place to make sure you can secure that. So that's things like procurement, looking at how you might work together. Have you got the right skills to make decisions? Those sorts of areas. We've just listed on our page 10 of the report sort of the areas where at the moment we have pulled out areas where we are focusing a little bit more in, so potential areas of VFM risk, which may or may not lead to a VFM significant weakness. We'll conclude that over the next couple of weeks. So the couple that we've just identified here, so one is around the designated school grant, so the fact that you've got that deficit there. So we're just understanding what work has been done and considering that around that financial sustainability domain, and also governance in terms of action plans, results, and how that has been managed. We've talked about this land, so I'll just skip over that one. Then the other couple of areas, so having a look at the investment in the solar farm. So again, just understanding how that might feature from a financial sustainability and governance perspective, particularly around sort of the project management aspects. Looking at the health and safety executive inquiry around the busway. So just considering the governance arrangements around that and any actions that's been taken during the period. Similarly, the waste PFI, from a financial sustainability, and just understanding how that potential cost increase might have been impacted on future plans. And then risk identification, which is when we're just sort of having a look at how risks might be from a horizon scanning type perspective, how they might be captured and fed into your risk register, and just sort of working through that. So that's not to say that all of those will result in a significant weakness or a significant risk area, but these are sort of the key areas. So I wouldn't be surprised if we don't see some of those. And as you can see, there's obviously across each of the domains. So I think that's probably where we are thinking that there probably will be some points to pull out for you in the next audit committee.
Okay, thank you very much. Any comments, questions from anybody? No, Jeff.
Just a quick question on value VFM. Personally, I regard this as a much more important report than the accounts, which I regard to be, personal view, rather academic. We're not going to dispose of most of the properties, but in the normal way. But we are going to go forward and I'm much more interested to know about the VFM is concentrated on last year's activities, but will the report also indicate where there are issues to be resolved in the coming periods as well, or is that beyond the remit?
So it is focused primarily on the arrangements in place during the year. What we do is give some consideration if we can sort of foresee a future risk. So we would acknowledge the fact that there may be risk coming down the line, and we would report that as such.
I think a good example of that is, in particular, is financial sustainability. So governance tends to be around arrangements that were in place during the period. Financial sustainability, by its very nature, is looking ahead. So we are very cognizant of arrangements in the period and careful to only comment arrangements that exist in the period. But we would also make sure that we flag should certain arrangements not be strengthened or considered that could have a longer term financial sustainability impact. And actually one of the things that we've talked about and I think will come through in some way in our final reporting is the combined implication from a financial sustainability perspective of things like DSG and this land and the waste PFI. So yes, I think is the answer to your question.
Thanks, Chair. I mean, obviously, and we've just rehearsed it in terms of the time period and the backlog, and normally we would have the value for money report earlier in the process. Clearly, members will have received on a number of these reports since the end of the year in question here. So as we bring forward the officer's report in response to the report, or in setting the scene for the report, certainly where it's appropriate, we will draw the committee's attention to, and these are the things. Not least, for example, the Section 25 statement that was picked up and discussed at Strategy, Resources and Performance Committee Tuesday. So we will reflect that and draw members' attention to that.
Okay, thank you very much. Any final comments, questions? No? Excellent. Well, thank you, Tom and Sarah and Emma. We move on now to, the report is for noting only, so no vote is required, and we look forward to the February special meeting when we can discuss your report fully. You're welcome to stay for the rest of the meeting should you so wish. There is the pension fund bit coming next, which
is me as well. So I
you as well.
say.
And then do stay on as you wish. Okay, item 5 then is the Pension Fund Annual Report and Statement of Accounts for 2023-24. The report will be introduced by the Investment and Fund Accounting Manager, Ben Barlow. Welcome, Ben.
Thank you, Chair. Hello, everyone. I'll start off with the accounts themselves, and then I'll pass over to and try not to steal your headlines. So you've got something good to say, hopefully. So the annual report has already been signed off by the Pension Committee on the 2nd of October. So within the document, we've got the annual report and the statement of accounts. It's the statement of accounts that needs to be signed off by this committee. The statement of accounts has gone to the Pension Committee in July, and it was well received. And it will be going as a final draft to the March Pension Committee, along with the auditor's report, which is what you're seeing today. What I'll do, if it's okay, it's a big document. I wasn't planning a page turner, but if I can make reference to page 107, I will talk you through the fund account, which for the accountants in the room is basically our profit and loss account. So contributions have gone up. That's in line with employer numbers going up and what we'd expect from the valuation. So what people are paying is their percentage rates. So no surprises there. We're happy with that. That's passed all our checks. Transfers in, similar to last year, but as with transfers out, which are referred to as payments to and on within this, the fourth line down within the fund account, they're really sort of demand led, really. But again, there's no surprises there, and that's passed all our checks and controls. Benefits, they've gone up again. That again is in line with inflation and with pensioner numbers, so no surprises there. Management expenses, similar to last year. There's quite a few factors within that number. So we've changed our asset allocation. So we've moved towards some assets that are less expensive, but also there's a difference in performance between the 2 years. So there's a number of factors in there, but really there's not a huge increase on the previous year. And again, we've done all our checks and controls on those, and we're happy with that as a line item. Investment income, you'll see that's gone up slightly. Again, the story behind that is that we're actually hoping to get more income in with the change of asset classes, with a view to bringing in more cash flows as the fund matures. The cash flow is more of an element of concern where maybe the contributions are coming down and the benefits are going up. So we would need to increase our investment income from other assets. So that's all part of our strategy. So we're expecting to see that investment income going up. So that's good to see. Profit and loss on disposal. Really, that's just an outcome of a successful year with the markets. Previous year, you'll see it was a lot lower. I won't go into all the issues last year, but it was a more difficult year for the markets. And again, we were moving assets around quite a bit, so there was a lot of movements, which meant there was more transactions that maybe we didn't get what we wanted. But so a good year all round, really, which is really reflected with the closing net assets of the scheme, which you'll see have gone up by about half a billion. Moving on to the net asset statement on the next page, that's 108 of the packs. So this is essentially a balance sheet. Only 4 lines on it, really. So the investment assets, this is, the assets that we actually hold. So our equities, our fixed income, our infrastructure, all those sorts of things. As you see, they've done well in the year, as is reflected from the profit and loss. Investment liabilities, that's really just a timing issue of invoices, mainly sort of management fees that we're paying over at the end of the year. Current assets and liabilities, the figure you're seeing here is just an accrual of contribution. Well, contributions is the assets line. So that is money we've received in contributions within April that relate to March. So it's just the accounting practice of the accrual you'll see in there. And the liabilities is the benefits going the other way. As I said, I wasn't planning a page turner, so I've got Mio with me. The accounts have been done in line with SIP for guidance, same team, same processes as always, but I'm happy to take any questions and before I move on to the auditor report.
At this point, I always ask Alison what you think of the accounts.
Thank you, Chair. And as always, there's just lots and lots of pages, lots and lots of detail in here. And, I think for a lot of people, it becomes completely difficult for them, I think, is the answer to understand fully what everything means. So thank you for taking us through there. I mean, obviously, one of the things that was mentioned there is around cash flow, and clearly as the fund is changing, so that is all being looked at quite carefully. There is, of course, lots of other things going on other than just actually the sort of day-to-day stuff, where there's been a lot of challenges around various activities that have actually impacted, and we don't know fully what is going to come out in the future. I'm thinking in terms of McLeod, around dashboards, around all of the other things, and of course the reorganisation of pensions that or pension funds that the government are vociferously pursuing at this current time. We don't quite know where everything is going to be heading, but thank you to all of the officers who are involved in doing this, and I am quite content with the accounts as they stand. Thank you.
Jeff, thanks, Alison.
Thank you. Well, we've probably asked this before. I'm pretty sure that Councillor Bowden touched on this last year, but whilst I passed some comment before about valuation of operational properties that we may never dispose of or not want to dispose of, it's less academic of the valuation of the fund. Now, can I ask, first of all, that valuation is given by our own actuaries. So it's one valuation from one firm of actuaries that provides that figure. And of course, the follow-up question is, how on earth do KPMG or any auditor validate that? Presumably, there's a whole range of values that people could come up with. So, is it an average? How much tolerance do we allow, etc.? But the first question is, who is doing that valuation? Is it our own actuaries that we employ?
Yeah, so I think the simple answer is depends on the asset class. Yeah, it depends on the asset class. So looking at our equities, we'd be looking at our sort of the market value on a day. So it'd be the accounts is obviously the end of March. If we're looking at something like infrastructure, we'd have a measurement from the fund managers. For the more complex ones, such as Cambridge and Counties Bank, which I'm sure the auditor will come onto, because I know that was a particular interesting point, we have a separate valuation for that. So really, it depends on the asset class, but we would always follow the SIT for guidance on how we should value these, and that's what we do. So I think the simple answer is usually it's the investment manager, but then the auditor's there to check that they are fair valuations that are done. And depending on the asset class, you can have some assurance over what that valuation is.
Sarah, do you want to come in here? And then maybe now's a good point for you to describe your audit and the findings.
Yeah, absolutely. I mean, that's probably the biggest area I was going to cover. So I'll just give an initial overview in terms of the audit itself. It's gone very well. I think it's fair to say clearly not the same challenges that we've had regarding the council audit, simply because we don't have the previous disclaimed issues, and therefore we do intend to provide an unmodified opinion for the pension fund audit. Page 4 sets out the position we were in at the time of drafting this report. I'm pleased to say that that has since moved on, and the outstanding matters that are identified there have now concluded, subject to just some final review. We also note on that page that we were waiting for an update on the valuation for Cambridge and Counties Bank. That has also now been concluded with no issues or adjustments identified. So perhaps picking up the point that has just been made, we set out on pages 10 and 11 of our report the work that we've undertaken and the conclusions that we've reached specifically around the investments. In terms of what I describe as the kind of general level 3 investments, we do look at we have access to our own market data, our actuaries. So whilst I lead the audit, it's my team of pensions experts as well as actuaries that undertake this review. So we provide a level of third party assurance over the valuations themselves. Cambridgeshire and Counties Bank is probably the one that's slightly more complicated, and therefore we have brought in our own corporate finance specialists. So as well as our pensions team, our corporate finance team also looked at this. Grant Thornton undertake the valuation on behalf of the pension fund, so it is an independent valuation. And then we have similarly kind of used an independent team within KPMG, and they have particularly challenged some of the key assumptions, such as discount rate, for example, as well as the valuation itself. So we've used our own model and identified a range in which we would expect that valuation to sit, and we were comfortable that the valuation range used by Grant Thornton sort of sat within the range that was acceptable to us. It is highly judgmental. We're never going to get to an exactly the same position, but we're comfortable that, you know, we're both in a range that we consider to be adequate.
Okay, any comments on that? I know we have this debate. Sorry. Oh, sorry, Mohammed. I wasn't paying attention.
Okay. It's just a quick question on the Cambridge valuation of the bank. Sorry. It's one of the management control kind of weaknesses that are being called out in the report, and I just wanted a bit more understanding on kind of what that weakness is and kind of what is expected of the council to do around that. My challenge was, well, obviously we've got Grant Thornton who come in and value it, and hopefully providing a kind of up-to-date value based on latest methodologies. And then that's also reviewed by a separate KPMG corporate finance team. So what was it that was needed in terms of the council to demonstrate that they've got appropriate review and challenge and etc. And also, again, too, would they have the skills to challenge it in the right way?
I mean, I think it's fair to say, and this may come through just to warn in future reports, the auditing standards regarding management review control are an extremely high bar. So essentially, the auditing standards require, in order to meet this control, that the body would have kind of sufficient expertise in-house to be able to effectively challenge a third-party valuation. That can often be difficult, and we acknowledge that there's a cost associated with that. And so it's really for the pension fund and the council to determine whether the cost of that is proportionate with kind of the value you get from it. It is a complicated area, and the report by Grant Thornton, included a number of assumptions. I guess in terms of what we'd expect from the council, perhaps there could be a separate paper that's produced that identifies, we have ourselves challenged the output of Grant Thornton. Although we use our own independent specialists, that kind of can't be taken into account because, of course, we're here to audit as opposed to advise. So I think there is probably a bit more that could be done to document that review more carefully. But we often end up with a control deficiency that we get to the point where we say, well, actually, we feel that enough is being done from a cost benefit perspective. It might not meet the high bar of the auditing standards, but actually we consider that it manages the risk within the council or the pension fund.
Sure, I think that sounds reasonable. My concern was just in case we started to do a lot of work around it, where it's always going to be audited to a high degree given the risk around it.
Ben.
Yeah, well, thank you, Mohammed, for the question. That's sort of the basis of our challenge. But I think on our challenge, we felt that we sort of do challenge and verify what is done by Grant Thornton, but I think we recognise we probably just need to sort of evidence the process we've gone through, and we're happy to do that. So on our management response, that's sort of what we're referring to, that we will look to just verify what has taken place from our end.
Okay, thank you. Sarah, is there anything else you wanted to highlight?
I wasn't going to draw anything else out from the report, I think, and covered off a lot of detail. And as I say, the audit generally has gone well. It's been very thorough, and whilst we've identified a few audit differences that have been processed, and we've discussed the control deficiency. So yeah, we intend to be in a position to sign the accounts by the backstop date. Happy to take any other questions, but I wasn't going to go through any more detail.
So Alison and Ben, that timescale for completing the work sounds reasonable. You're happy with that? Yep. Can I just ask Ben one parochial issue? On page 159, talking about audit fees, it says, to date, we have received 6 letters from other audit firms requesting that we undertake a programme of work on their behalf in respect of post-retirement benefit obligations at the fund's admitted and scheduled bodies, and that will cost 48,000 plus VAT. Why should we pay for that? Why do these other audit firms not pay for it? Oh, sorry, Michael. It looks like Michael's going to jump in.
Yeah, I'll let Michael go, and then maybe I'll pick up from our end if need be.
Yeah, Chair, it's for the audit opinions for the other constituted bodies within the fund. So, for example, the districts, and I have flagged this with the CFOs at each of those authorities, and we will be then working through a formula to have this refunded for our element and their element.
Good. Okay. Ben, do you want to add anything?
Yeah, just to add that with a lot of sort of the accounting reports work, we sort of do we would pay the actuary for any accounting reports the employer gets. We would then recharge in a lot of cases. So we are recouping many of the fees. It might not be the whole figure you see there, but there is a process for recharging fees where on accounting reports.
Okay, thank you very much. I will probably ask the same question again because I will forget the answer, but that's very helpful. Thank you.
I'll be prepared next year.
You will be prepared. Okay, excellent. Thank you very much. So we'll move to the recommendations. We're being asked to approve the final statement of accounts 2023-24 and note the pension fund annual report for the 2023-24 financial year and note the findings of external audit documented in the audit results report. And that I think we have all done. We take that as unanimous. Excellent. Thank you very much. Thanks, Ben. Thank you.
Thanks so much. And thanks to Asim and the team. Thank you.
Move on now, Patrick, to item 6. Item 6 is the Adults Health and Commissioning Directorate Assurance Report. This is the first in a series of Directorate Assurance reports which we asked to add to our work programme. Patrick Warren Higgs, the Executive Director for Adults Health and Commissioning, joins us to present the report, and he's joined by Sarah Bai, who is the Directorate's Head of Performance and Strategic Development. Patrick or Sarah, do you want to just highlight, Patrick, the key points of your reports?
Will do. Thank you, Chair. Good afternoon, committee. So the report allows committee to scrutinise and gain assurance of the controls within the Adults Health and Commissioning Directorate and provides an update on the actions which are being taken to strengthen the arrangements for governance, risk and control. We've broken the report into several sections. So we've got one which is around the annual governance statement action plan. There were 2 specific actions for our directorate around complaints. One's around implementing the complaints action plan and to assure committee we've got a system of learning from complaints and proactively reviewing and feeding that back into our training sessions and lessons learned. We've got a review of the complaints policy, which is underway. The local government social care ombudsman has also recently issued guidance on how to prepare a good quality best practice complaints policy. So we're building that on board. We've also got, as part of the internal audit plan, which isn't contained in this report, internal audit will also be looking at our complaints policy and the way that we adopt our, and use our complaints policy when we receive complaints. We then move into directorate controls. So during this year, we've implemented directorate change board to monitor our change projects and financial savings. We're implementing the council's performance framework, which was approved at SRMP in October, and we're developing a directorate scorecard. And last year, at my request, internal audit carried a review of our 24-25 business planning process with recommendations. That's been through the Accounts and Audit Committee, and it was a paper that went to the Adults Health Committee last December, just for assurance on that piece. Risk register, we've got 2 risks on the corporate register: safeguarding and outcomes for learning disability, or LD, following decoupling. The full list of current mitigations are contained in the report, and risk continued to be monitored by the risk owner and the adults leadership team. We've got 4 outstanding actions in relation to 2 areas: business planning review and case 143, which is a specific case around direct payments. We've got all outstanding actions will be completed by the end of March. We've got some business planning actions which are around benefit realisation, and they would be implemented during the 25-26 projects. And the direct payment case final actions are around finance and working with the family, which is ongoing. But we are hoping to have those completed again by the end of March. Complaints, we've got a full customer care annual report, which is due at Adults Health Committee in March. And as you'll be able to see from the report, 13 out of 269 complaints were taken to LGSCO, the Ombudsman, which is about 5% of our total number. Of the 6 that went to were not investigated, 3 were not upheld, and 4 were partially upheld of the numbers that went. The LGSCO was satisfied that we had implemented all recommendations, but an actual recommendation we've taken on board is the length of time in terms of hitting our deadlines for getting reports through to LGSCO. We've had no whistleblowing received directly within the directorate, but staff have essential training around whistleblowing, and will be continued to remind people how they can disclose through those routes. And the final position is around our Care Quality Commission as part of the Health and Social Care Act 2022. Care Quality Commission are now undertaking assessments of adult social care services across the country. And since writing the report, we've now had notification that we'll have an on-site visit week of the 31st of March this year. Preparations are underway with staff and partners to support everybody within this process. We've got certain cases to submit which will be scrutinised through that process by CQC, and the report and rating will be provided roughly about 1 month after their visit, so we would have expected that into early April. That's all for now, but I'm happy to take any questions, and Sarah's joining me as the author of the report has got a lot more insight into some of these items.
Excellent, thank you. Any comments, questions, Jeff?
Hi, Patrick. This is a question, of course, I've asked in the Adult and Health Committee, but I do believe it is a matter for audit as well. And I know from our last report that this is a matter that's ongoing. It concerns the professional indemnity insurance of external providers that act in effect under our name, whether they're agency or organisations. And just to confirm, or perhaps you can tell me where we are in the process of ensuring that that insurance exists, because if somebody is negligent and there are claims against us as a result of that, we could be exposed.
So that was part of an action from the Adults Health Committee. There was a response provided. I can't exactly remember the detail, but from my recollection, it is in place, and it is part of our process to ensure it's in place. But I'll double check and I'll make sure we can get back to committee with that answer.
Saying that the investigation to ascertain that is ongoing, not that you're satisfied that insurance is in place.
I'm satisfied that indemnity insurance for services that are provided is in place, but I will check the response that was given to the Adults Health Committee to make sure we give the same answer here.
Jeff, let's make sure that we ensure that the question is addressed to the relevant committee, either Adults and Health or here, whichever is most appropriate, rather than trying to duplicate things. Well, it may be audit matter, but yeah, let Patrick give the answer to you first. Any comments from other people? Alison.
Thank you, Chair. Get there in the end. I have quite a lot to do with another council, not this one, because my brother-in-law is in receipt of lifelong care. What I see is therefore differences between different councils as well. It makes it a little bit difficult for me. What I'm concerned about is the number of complaints that you are actually talking to. The reason I raise this is that my mailbox, the second largest number of complaints that I'm actually getting is around adult care. And I am actually quite concerned that some of the most vulnerable people are struggling. And if I'm getting a lot of people complaining about adults' healthcare, I'm actually really concerned about the ones who should be complaining, who aren't complaining. I'm just really worried that there is, seeing a lot of people are quite obviously unhappy. 269 complaints to me feels like a lot that you've got there, and I suspect that doesn't include some of the ones that I've actually seen recently. Do you believe that everything is being done in the best way it possibly can be done, or is there something that needs to be done to improve this service?
So this is a historical response. So this is from the last full year, so it won't include any that you've got at the moment. And what I would say is, if you're receiving anything into your mailbox, you can forward that on and we will treat that as a complaint. If the person wants it to be treated as a complaint, they don't have to fill out a complaint form. So, but that's about your particular information you're receiving. I suppose in terms of numbers, no, it's not ideal to not have any complaints, but we accept that on occasions people aren't happy with the outcome either of their assessment, particular financial assessment, or some of the work that's ongoing. And it's important that we use that to learn from their experience so that we can improve our own processes and improve the other work that we do going forward. So whilst it's not ideal to have any complaints against us, we would want to bring that number down, but we would want to learn from anybody's experience, however they want to feed back. And that includes compliments as well, but complaints in particular. So all I would do is if people aren't happy with some of the services that they're receiving, then they must get in contact with us and we can use that to help us to learn and to improve some of the services we get going forward.
Thank you for that response. It is challenging. I don't want to talk about, individual cases, but I do think that there are some fundamental things that I would like to talk to you about privately at some point.
Mairead, can I ask you, are you content with everything that Patrick has said and is doing to address the issues identified in your internal audit reports?
Thank you, Chair. Yes, absolutely. We only have 4 overdue recommendations from Adults Health and Commissioning at the time of this report, which is a small proportion of the overall recommendations that are outstanding across the council as a whole. So yeah, would support the work that's going on to close those down within the next couple of months.
And more generally on the different topics that he's discussed and the questions that Alison and Jeff have raised, you're content with
Yes,
that?
I think, in terms of the complaints, as Patrick noted in the report, that is an area that we're currently undertaking an internal audit review on. So we will come back to this committee. I would think potentially the March meeting, but potentially the one after that, depending on how that audit progresses. And we'll be able to give you sort of more of an update from an audit point of view on complaints at that point.
Okay, thank you very much. Stephen, thank you.
Patrick will be delighted to hear it's not a question from me. Chair, it's a comment that I think is important to just make, mindful of some of Councillor Whelan's points. First of all, adult social care provision, because unlike children's social care provision, it's inherently commoditised and marketised, so it's effectively commissioned rather than provided in-house, although Cambridgeshire County Council does have some in-house provision, actually probably more so than many other of our neighbouring county councils. I think Councillor Whelan raises an important point, which is a national consideration for the Department for Health and Social Care around the consistency of the service. And I think actually if you look at the fact that we have I hate to describe it as a market, but that is the correct term in the way it's been framed. But we have a market for adult social care, which provides a whole range of services, and that is done through a whole range of different sized organisations, some of which are more effective than others, some of which are effectively single people providers. And I think the marketisation of social care perhaps leads to some of the inconsistencies you're describing across different parts of the country. As I'm sure members are aware, the government has already set out its proposals to convene, dare I say, yet another commission to look into the future of adult social care, led by Baroness Louise Casey. Unfortunately, the work of that commission is not expected to report fully until at least 2028. However, that will be taking forward some of the issues that the government that was elected last summer are interested in considering around national care service provision. I have to say, however, from being in another country that is ahead of the game on the national care service provision, that has not, in my experience, either improved consistency, quality, or effectiveness of the services yet. So I do hope that before any recommendations are made to move towards any form of nationalised care service, we actually look to ensure that the existing good parts of the provision are sustained. And we also want to work with the Care Quality Commission, both for our commission services, but in terms of our own in-house provision being inspected in March to see whether or not there are things we can learn. But I just thought from a policy perspective for members of this committee, the point of consistency is a very good one to raise. And I think it's a point that we would probably reflect upon in many other parts of the public sector where marketisation has taken place. Thank you.
I think that's a good point. bearing in mind the things that you've heard, Patrick or Sarah, is there anything that you'd like us to take away and do that could help you in your endeavours? It's good to hear all the positive things that you are doing, but if there's anything further that we can do, we'd be delighted to help.
Yeah, thank you, Chair. I don't think there's anything immediately, but I do think that the report that Mairead has touched on, which is around our complaints and approach to complaints, will be helpful for committee to receive and make recommendations from anything that arises from that process, particularly picking up Councillor Whelan's point about how we've used complaints and applied complaints in the way that we support people, and try and address those at an earlier stage rather than waiting until the person feels that the only option is to then put a formal complaint in. Certainly those kind of recommendations would be welcomed.
Okay, thank you. Well, do come back to us or Adults and Health through Richard or Susan if there's anything that you think we can, as councillors, do to help you. Excellent. Thank you very much for coming this afternoon. Sorry, I just need to read these bits here. We move to the recommendations. The committee is being asked to scrutinise the contents of the report, noting the contents, scrutinise the contents of the paper, noting the contents and providing a view that there are internal controls in place within the directorate, which we have done, and note the actions and approach being taken to provide adequate internal controls to reduce risks to the council and support the delivery of key functions. So we've done all those things. No vote is required. We've made various suggestions and comments, which Richenda will no doubt record. Thank you very much. Item 7, Richard, you're now on. Item 7 is the Adult Social Care Client Contributions Method of Credits. The committee is requested this at our last meeting, and as I said, the report will be introduced by Richard Gibson, the Head of Service for Financial Operations for Adult Social Care. Richard, over to you.
Thank you, Chair. Good afternoon. So, as just mentioned, so the committee has previously asked to understand for adult social care client contributions, the crediting method for those client contributions and how adjustments are made, how those credits and revisions are input to customer accounts and collections, and questions around a person's typical experience in the financial assessment process. Do I need to be a bit closer? Is that a bit better? Okay, excellent, thank you. So the report that we've presented describes the 4 main situations where credits will arise for clients. So the most common of those being financial reassessments. The report describes the system and processes the council use to transact those credits. So data from Mosaic to ERP Gold. And the report describes a person's typical experience, acknowledging that the financial assessment process itself is quite challenging, and where a person experiences lots of reassessments, so for example, when their disability related expenditure changes frequently through the year, that can then make a series of credits to their account, can then be frustrating and at times difficult to understand for the person to understand as they get their invoices, because we invoice 4 weeks in arrears. So if they have lots of changes to their account, it can be very challenging for them to understand. To support clients in that, though, my adult finance team, when they transact a series of credits for a client or a person, will issue them a statement of those revisions and changes to assist in that kind of transparency. And then in terms of functions for the council, so clearly social care practitioners, the financial assessment team and the adult finance team are all functions there to support clients and families in understanding their contributions and invoices. I'd welcome any questions the committee has.
Thank you, Richard. A very helpful report, very clear in its description of the way in which client contributions are assessed and managed. Any comments from anybody? No. Well, it was either too complicated, or I think on the other hand, it was actually very clear, Richard, and as a result, we were able to understand how the arrangements work. Oh, go on, Mohammed.
Yeah, it's just a quick question. So I understand the process and the reason why, you need to credit these accounts. I guess the only thing that was missing for me was what are the controls in place just to make sure that this is working as it should be? So the process around ERP and someone updating those accounts from a credit perspective, it's a manual process, right? So what's the quality assurance in place to make sure that's been done timely, accurately, etc.?
Thank you, Mohammed. So we have a series of controls within the adult finance team function in terms of checks and balances and a segregation of duties in terms of those who input on one side and check on the other. We recently had a mosaic audit, as it's called, of those controls for effectively what is accounts payable and accounts receivable through Mosaic, because that's the functions that Mosaic supports with for adult social care. And that recent audit recommendation has been satisfactory. It's probably not quite the right audit expression given the audience in the room, but satisfactory. So those controls are in place between those two systems.
Okay, fine. Thank you.
Thank you.
Mairead, do you want to add anything more about the Mohammed's point and the audit that you carried out?
Thank you, Chair. Nothing further to add at this point, I think.
Okay, thank you very much. So we have they looked at the report. The report is for noting it only and no vote is required. Thank you, Richard. We move on to item 8, which is our regular internal audit progress report, which will be introduced by Mairead Claydon, Head of Internal Audit and Risk Management. Mairead, over to you.
Thank you very much, Chair. So as noted, this is our regular update report on internal audit activity, and it covers the year up to the 31st of December. Key things to note, per section 7, we have had a reduction on audit agreed actions overdue by 12 months or more from 18 at our previous report down to 11, which is very positive movement. At the time of reporting, we had 81 outstanding actions overall, which was similar to our previous report where there were 79 actions. As of today, I can confirm we're down to 75. So we are seeing positive movement in terms of the overall number of actions overdue. We have not issued any limited assurance reports since our previous update. You will see within the progress report at Annex 1 that we have updated the internal audit plan to the end of this financial year in section 6. That includes some audits being deferred, but we are expecting to be on track to deliver a balanced audit plan with sufficient assurance for an annual opinion. We have included an indicative flexible audit plan for the first 3 quarters of the 2025 to 26 financial year in line with our usual process. However, I would note that our primary period of internal audit planning is now underway. So a fully refreshed audit plan for 2025 to 26 will be brought to this committee in March for your consideration, and that will follow our process of consultation with members of the senior leadership team and other work to ensure that our risk assessments are fully up to date. We've undertaken a significant round of horizon scanning and so on. We have brought a short update on some risk management activity at section 8 of the report, but we will be bringing a full report on the corporate risk register to the March meeting of this committee. So that is a brief interim update. Section 9 brings you an update on investigations, and that includes information on all closed investigations that have been raised, which includes those where it was determined that no further action was required or they needed to be referred elsewhere. We have issued one final investigation report, which is discussed at section 9.2.2, and the National Fraud Initiative has now started to issue us with matches. So services will be asked to review those matches which could indicate a risk of fraud and assess that risk within their own services. We have yet to receive creditors and procurement matches at the time of writing, but throughout the next year we will be bringing updates on progress with those NFI matches to this committee. And then last thing to note before I go for any questions is just that following our update to the previous meeting of this committee, the payroll report for 2023 to 24 has now been issued. There is a short summary of the findings at section 10 of the progress report. Members of this committee can also access the full report within the Microsoft Teams site that is set up for you if you would like to read that. So that's the summary. I'm very happy to take any questions.
Thank you, Mairead. Any comments, questions? Well, while you're thinking, a couple of things from me. Firstly, it's good news about your resource and recruitment progress. Not just that you've gained new people, but also that somebody from internal audit has joined finance to get a bit more wider experience of the other side, as it were. I wanted to raise a question about on page 216 about highways service and implementing a time recording system. Is this something that we still need to ask Frank when he comes next time, or have you now resolved that finance people will be filling in timesheets?
Thank you for that question. So this is probably up to the committee to determine if they would like to ask that question. There is an interim solution in place, which is more of a manual time recording system. So it may be worth asking for an update on progress with implementing a more permanent solution to the timesheeting need.
Stephen or Michael, do you have a view about timesheets? Stephen's shaking his head.
Chair, I certainly have a view about timesheets, but I think I'll let the Executive Director of Place and Sustainability respond to his audit action when you see him. Thank you.
Okay, all right. Well, I have a view about timesheets as well, being having filled in timesheets for decades. I actually found it quite a useful discipline, but anyway, let's wait and see what he has to say when he comes. The other question, Stephen, is about the corporate risk register. You mentioned that strategy, resources and performance, that you're doing quite a lot of work on that, and I just wonder whether you'd like to tell the committee about what you've commissioned in advance of us getting at the corporate risk register at our next meeting.
Thank you, Chair. So yes, you raised a question at Strategy, Resources and Performance Committee on Tuesday of this week, and it was just to reassure members of the Audit and Accounts Committee that following the government's publication of the English Devolution White Paper prior to Christmas and the likelihood of some form of local government reorganisation being taken forward, potentially having an implication for Cambridgeshire, the county, the district, and indeed our neighbours in Peterborough, we are currently going through the corporate risk register with a view to understanding any additional changes we need to make in readiness for local government reorganisation, or indeed arising directly from other changes that government indicated would happen through the white paper. At some point in the future, I would anticipate we will need a separate and bespoke local government reorganisation risk register from a county council perspective, but then equally importantly, we will probably need a shared one across the various local authorities within our ceremonial county boundaries to ensure that the shared risks are being addressed. I would just say that, Chair, whilst we can address some of the issues within our current corporate risk register and look at the implications of local government reorganisation, in many ways, as with my earlier non-speculation comments today, we are in the hands of government in terms of a degree of certainty and timetabling, and whilst we've been given indications about timetables being achieved, it would seem there is a degree of drift already happening in the centre. So I will do, along with officers from the corporate leadership team and Mairead's team, we will do what we can to bring the corporate risk register up to full contemporaneous position. We have our next meeting of the Corporate Leadership Team Risk and Assurance Group on the 7th of February. So we'll all be looking at the various corporate risks we own in advance of that, and then we will no doubt wish to discuss it further at our meeting next week. Thank you, Chair.
Okay, thank you very much. Well, let's remember to talk about that when we next discuss the corporate risk register. I'm sure we will. Any other comments, questions from Mairead? No, thank you very much, Mairead. Oh, sorry, Mohammed.
No worries. Just a quick question on the payroll audit. I think we had 9 medium issues and 2 high issues. Just a question on the rating around why it's moderate, why we're comfortable with that, given the number of issues that we're identifying in that space.
Thanks, Mohammed. So I think that will just come back to the nature and extent of the issues, and also to some extent the progress that we've seen on some of them. So there are some areas around control accounts in particular where we can see that there's a known issue which has been reported previously. It's an ongoing issue, but we can see that that is improving and that actions are being undertaken to work to clear some of the issues around control accounts. Similarly, there are some other issues that were identified as part of the audit around I'm going to use the wrong phrase now, around sort of quality assurance checking. And actually we could see that even before the final report has been issued, the service is engaging with that, and they're already putting in place additional work around quality assurance checklists. So it's a balance between the original finding of the issues and actually the progress that we can see being made by the service. That means that we're comfortable with a moderate opinion.
Thank you. And just a separate point, I just noticed some of the overdue actions that over 3 months or 12 months overdue. There's quite a few dates missing in terms of when they're going to deliver by, or the commentary hadn't been updated. So I don't know if that's something we could escalate.
Thank you. Yes, it's something that we discuss when we bring these reports to management meetings, but we are dependent on services to provide us with those dates. But yes, it is definitely something that we will continue to attempt to push forward with.
Could we put an action for one Stephen Moyer to encourage his colleagues to complete those dates? Is that appropriate, Stephen?
Chair, you might want to invite the Executive Director of Finance and Resources to comment on how well encouraged he already feels. Thank you.
I'm sure he does feel encouraged, but unfortunately, as Mohammed says, not all of the executive directors are as good as he is, and others are in filling in the dates, or they move the dates in order to give themselves, it feels, more time, which is not very satisfactory either.
Chair, I'm more than happy to encourage away, and I'm sure that will be discharged before the close of business today. Thank you.
Excellent. Thank you very much. Well, one of the overdue essential recommendations is from the interims and agency workers audit. So no doubt when we get to that, I will expect colleagues to answer the why is that and what we're doing about it. Right. Thank you very much, Mairead. So we have been asked to consider and comment on the content of the report, which we've done, and no vote is required. So we do now move on to item 9, which is our regular report on consultancy and agency spend. This will be introduced by Claire Alice, the Head of Procurement Commercial, and Caroline Adu-Bonsra, Head of HR and Recruitment. Welcome. Would you care to introduce the key points in the report, and then we'll ask you questions. Thank you.
Thank you, Chair. So yes, this is the report we bring every 6 months, covering the spend on agency, interims and consultants. So the data has been provided in the tables that you can see in the report, and it's broken down by director and team. Generally speaking, the spend across all of the categories is going down when compared to the spend in the same quarters of the year before. the narrative on that spend is provided in section 2.4 at the end of the report. So each directorate has provided their own narrative on their current levels of spend. And I suppose the key important thing to say is there is considerable scrutiny over the spend on agency interims and consultancy. All that spend requires an approval form, and it requires approval through the Workforce Expenditure Panel as well. I think that's all I wanted to say at this time, but welcome any questions.
Okay, thank you. Any comments, questions? Who or which committee, if it is a committee, actually looks at and challenges who would have signed that off, and is that good value for money? Michael.
So yes, Chair, in relation to this specific item, this related to the decoupling with Peterborough in relation to the digital services. Obviously, we go through in terms of that process contract awards as appropriate. And that's something that is within my overall scheme of delegations, but in this instance, relates to capital budgets that are approved and go through the capital programme board. So there's not a committee per se, given the level, but in terms of setting, obviously, the budget that I then have the delegation for.
So you would sign that off, would you, as the accounting officer or the responsible officer in that instance? And there will be other people in similar positions, but
that's right, Chair.
Okay. And does this information just come to us, or does it go to other committees as well, who might know more about the individual lines than we do?
The overarching report just comes here, but I think the spend details is now going through Financial Transparency Panel as well.
Chair, just to clarify, the report actually comes through the corporate leadership team before it comes to Audit and Accounts Committee, so it's scrutinised by me and all the executive directors, in addition to which, given the further financial controls we introduced during the current financial year, certainly for consultancy expenditure, that now goes through the Officer Financial Transparency Panel that Michael chairs as the Section 151 officer, and then separately we had our pre-existing workforce expenditure panel that covers agency workers, which I chair monthly. So those are given fairly rigorous scrutiny now, and those are additional controls that have been introduced, particularly the Financial Transparency Panel that Michael now chairs on consultancy expenditure and other associated matters. Thank you.
Right, thank you. And Mairead, the outstanding internal audit essential recommendation, where are we with that? Do you know, or should we ask Claire?
Thank you, Chair. Bear with me one moment. We have got an update on it. So the one of the aspects of the overdue recommendation was around clarifying the shareholder agreement, shareholder board, and overarching corporate contract. That is progressing, and a deed of variation has been sent for sealing to Pathfinder Legal. So I'd anticipate that aspect of the recommendation would be completed in the relatively near future. and I believe planning has started with regards to the future of the Opus arrangement and ensuring that that takes into account some of the findings from the audit. So I think we're waiting for the service to have had an opportunity to consider what that will look like and come back to us with more of a firm view on how they'll be taking the rest of the action forward.
Thank you.
I think those actions were in relation to agency and interim spend. There is a internal audit report on management of consultancy spend as well, and I updated some of those actions actually yesterday. So we are in the process of completing those actions. So they were in relation to the policy and the form that requires people to complete to approve consultancy spend. So they are in hand.
Oops, okay, thank you. Jeff.
We've got quite a lot of information on quarterly spend. Quite interested to know, and particularly about on the interims, the length of time that some of the interims are in post, as it were. I mean, do we have interims that have been here for 5 years, or presumably, I'm hoping to hear that you're going to tell me that they're reviewed periodically, their contracts are time limited and the position is reviewed. But I do know of organisations where an interim has carried on almost indefinitely. So perhaps you can help me on that one.
Yeah, certainly I can answer that. So I can assure you we don't have interims that have been here indefinitely or for that many years. So we have the agency workers have a 13-week period when they're allowed to be with us, and then if they want to extend beyond that, they have to go back through the rigour of the Workforce Expenditure Control Panel. For interims, we run reports. We can see regularly how long they've been with us, and we take reports to the directorate management teams and challenge on length of time they've been with us and also cost.
Okay, and I can understand that, but when you've given those reports, are they interims then replaced? I mean, do we have some very long-serving interims working with us? I suppose that's really my question. And that may be because we cannot find those skills in the open market, for example, like the case we were talking about earlier. So.
Yeah, I think there are some people that have been with us longer periods than others, and that is genuinely where there's either a piece of work that's being undertaken and they're here for that piece of work, or there's a shortage in the skills market. So, but it is monitored on a regular basis.
Just following up on interims, on page 290 near the bottom, there's a column which says in the table 10 most expensive placements, and then there's a symbol by it which I think is supposed to link to somewhere but doesn't seem to. What does that actually mean, and why is the GCP, which I assume means Greater Cambridge Partnership, included within this table? Do we count all their staff in our organisation? Stephen.
Chair, on the point regarding the GCP, just to make that absolutely clear, we are the employer for all staff for the GCP. We are the accountable body to government for the GCP's funding. So any of their workforce issues, whether permanently employed, fixed term employed, agency or interims, would be counted on the County Council's books. That's why it's included in here. Thank you.
So does that mean these 4 interims for the GCP are uncertain because nobody really knows how long the GCP is going to be in existence, or are they just pending permanent appointments, or they're just covering a temporary job?
Chair, again, I think in terms of the nature of the Greater Cambridge Partnership as a body that's there to deliver programmes of work, some of these interims will be time limited to particular pieces of work, given the nature of the skills they're required to have. Some of them may be to ensure that the GCP has sufficient capacity to deliver, and that might be actually more value for money to have interims than have permanently employed staff. I have to say, in the case of the GCP, a mix of interim or contingent labour rather than entirely permanently employed is sensible, because as we know, the GCP is due to cease its work by 2030 at the latest, at which point government funding will also cease. So I would rather we got the mix right, and in the nicest way of saying it, reduced future.
No, I agree entirely. Okay, any other comments, questions? David?
Regarding the GCP and regarding the number of interims there, why is it not quantified? Why is it included in the PNS?
Chair, that's a very straightforward one to manage. Place and Sustainability is the host directorate for the Greater Cambridgeshire Partnership within our workforce, so the placements are included within their totals. They are separated out in the table the Chair's referred to, so it mentions 4 out of the 10 most expensive placements, but they're simply covered within the lines for the Place and Sustainability Directorate where they're applicable. We can separate them out further if that's necessary, Chair, but they're just included within the overall numbers for the Place and Sustainability Directorate at present.
I read that. I would like to see it separated personally, to understand how many there are in there of that 23 are in GCP. I wouldn't like to think there was 4 there and they were all the 4 most expensive. I'd like to see a little bit different to that.
I think that's
we can readily do that, Chair. In fact, rather than wait for a further meeting where this report comes back again, we can send a note to members of the committee outside as an action point, if you're agreeable. Thank you.
I think that's a good idea, David. Are you happy with that? Yep, thank you. Any other comments, questions? No. So the committee is being asked to note the information contained in the report. No vote is required, and we have done that. Thank you very much. Thank you, Caroline. The final item of business is the committee's agenda plan. I would draw members' attention to the special meeting taking place on Wednesday, the 26th of February, to consider the Council's Statement of Accounts 2023-24 and the audit results report. We also have a private meeting scheduled for the 27th of March with the Council's internal and external auditors ahead of the public committee meeting that afternoon. Are there any other comments, questions on the agenda plan or anything you want to add, Rishinda? No. Okay, so that we'll take the agenda plan as noted. And that concludes today's business. So as I say, the committee will meet next for a special meeting on the Wednesday, the 26th of February, and I declare the meeting closed. Thank you very much, everybody.